Are you ready for the economic reports set to be reported tomorrow? What's going on, team? It's Ricky here with Tactical Solutions. Hope that you're all having an amazing Tuesday. Make sure you drop a thumbs up and subscribe if you guys haven't done so already. But let's jump right into it. So the overall NASDAQ market as of right now is up 0.11%. But of course, like we've seen so many times before, just because the NASDAQ market currently is in the green does not mean that it has to open up in the green. And today was a great example of that. Now, what exactly caused there to be so much selling pressure? The uncertainty of 2023. Tesla got absolutely destroyed, to say the least, right? I mean, let's look at Tesla firsthand. Tesla selling off on the day, it lost 11.41%. And after market hours, an additional 2.4%. I mean, think about that. We are talking about literally almost 14% of a loss in valuation in just one day. From $414 a share all the way down to currently at $106. So again, a lot of people were asking, hey, Ricky, is it possible for Tesla to drop below $100 a share? I think now it's, not very far-fetched based off of us being closer to 100 than we are to 200, right? So based off of Tesla current price point and its previous all-time high, it offers about 279% ROI, almost 280% if it were to make a recovery. Of course, Tesla does not have to recover. It can continue to sell off. And I got asked a great question, can Tesla not recover? Of course, companies fail all the time. Now imagine that type of story where Tesla and Elon Musk goes from the richest man in the world to then going bankrupt. That would be an insane story. I mean, Elon has an army behind him, but it seems like ever since he acquired Twitter, not just because of how unfortunate 2022 has been, but because of that acquisition, it's been going downhill ever since then, going from $300 a share all the way down now to $109. So one of the things that I quickly want to talk about is the thing that I really like to focus on my channel are economic reports. They sound super, super boring, but trust me, they're very, very important, especially if you're just getting started into investing and or trading in the stock market. So these economic reports are released on a weekly basis, and there's a schedule for them. The ones that are set to be released tomorrow are the NBA Mortgage Application Index. It's not super significant. That's going to be about 2 hours and a half before the stock market opens. But the one that I want to talk about is 30 minutes after the market opens, which is at 10 a.m. Eastern time. And this is pending home sales. So if you're part of my Learn Plan Profit group tomorrow at market open for our live trading session, we will be able to capture pending home sales report and how the market reacts to this. The market does have an expectation, so it expects pending home sales to be down negative 0.2%. The prior report was negative 4.6%. Now, great question that I got asked is, what exactly are pending home sales? Well, the number of properties currently in the U.S. month over month that are under contract, meaning that they're not properties that have necessarily been sold, but they're under contract to be sold, right? Obviously, the buyer always has the option of canceling that contract. But let me share with you why this is important, right? The Federal Reserve has been trying to fight inflation. Inflation was at a 40-year high. And by raising interest rates, they made it more expensive for people to borrow money. This has sent mortgage rates to skyrocket, right? We went from an average of 3.5% to an average of over 7% across the United States. And if you actually do the math, it's very, very expensive. It's like literally a 40% increase on your mortgage. So how has this affected the stock market? And again, I love sharing this data with you guys because I feel like it will give you a better understanding of why the market is reacting the way that it does shortly after these reports, right? So these pending home sales reports are reported on a monthly basis, right? So the month completes itself and then it reports. The great thing about this is that as of now, right? So based off of just as of last month, we have the pending home sales index currently at a level of 77.1%. This is down 80.8% since last month, right? And then it is down 122.4 year over year. This is a change of negative 4.58% from last month and a drop of 37.01% from a year ago. Now, the thing that I want you to understand of this is that, those are just a bunch of numbers, right? The percentage is kind of like the thing that I really like to focus on. It makes it a little bit easier for me to understand, and I like to keep things simple. I don't know about you guys, but a drop of 37.01% since last year. That means that there has been a 40% drop in pending home sales year over year, meaning that a year ago, right, the number of properties that have been sold were nearly 40% more that were currently under contract. And it's not much of a surprise, right? A year ago, the average interest rate was around maybe 3 to 4%, right? 3.5% to say average. Right now, we're still looking at an average of 6 to 7%, so 6.5% interest rate, which makes it a lot more expensive to actually afford a mortgage, right? Also, with the uncertainty of the market, it is instilling more fear in potential new home buyers, which means that as of right now, and again, this is something that I've been able to experience myself. A lot of you guys know that we flip properties in the Arizona area. And I went from, flipping, I would say 1 to 3 properties every single month last year to, as of right now, we only have 1 active house flip. And in the past 4 months, we have not acquired a new house flip. I mean, it's really, really slowed down, right? Because of the uncertainty, homeowners don't want to sell below what they think their house is valued. And obviously buyers don't want to buy above because of the uncertainty of the market. So I just wanted you to understand of why has the market slowed down? Why are we seeing a slowdown on pending home sales, and how this can affect the report, right? So now this is kind of like the question: how is it that this report affects the stock market? Well, remember, the Federal Reserve wants to see the economy slow down. They would love the economy to feel the pressure. So if they actually, based off of this current report, right, pending home sales, it would be in favor of the Federal Reserve for them to see a bigger slowdown than what is expected. They have seen and are expecting a drop of negative 0.2%, meaning that pending home sales should be going down negative 0.2%. But if it goes down any more than that, the stock market might react in a positive way. And it's a weird way of thinking, but right now, bad news is good news and good news is bad news. And this is in the eyes of the Federal Reserve, because if the pending home sales actually comes in worse than expected, meaning less homes are actually pending to be sold, this is good for the Federal Reserve, and hopefully they can justify being less aggressive in 2023. And if they're less aggressive in the way that they raise interest rates, then that means that, again, it will lessen the effect that they have to the overall stock market, right? Because when they raise interest rates, it decreases growth because it's more expensive for businesses and business owners to borrow and leverage money, right? So again, just wanted you guys to have a little bit of a better understanding of the significance of pending home sales, why it's important, and why it's down so much year over year. So if you have any questions, again, I hope that you know that you can always send me a direct message via Discord. And trust me, there is no dumb questions. We all start knowing nothing, right? You can try to Google search your question, and I would encourage that. But if you still can't find the answer to your question, if you're having trouble, deciding what application to use, just send me a direct message, right? Try to figure it out on your own. But if you can't figure it out, the first link in the description down below is my Discord, and you can send me a free direct message either via Discord, or if you're on Instagram, that's that third link in the description. Friendly reminder, if you comment on this YouTube video, or if you try to reach out to me via Instagram, I only have these accounts. I'm verified on Instagram and I'm verified on YouTube as well. I do not have any other accounts. I will never message you through WhatsApp. I will never message you through Telegram. I don't have any crypto fund. I don't trade for other people. There are so many fake accounts out there that will ask you to fund an account money and that they will trade for you pretending to be me. I offer nothing like that. I offer one thing, and that's my Learn Plan Profit Group. You heard me talk about them in this video, and they get to watch me trade live every single day. That's the second link in the description down below. I offer nothing else. So if you want to work with me on a closer basis and you're tired of guessing and you want to actually start learning, again, that is exactly what I offer within my LPP 2.0. It's designed for complete beginners. And yes, you get to watch me trade live every single day. Imagine that for 2023 for a change. Again, it's a one-time payment. It's lifetime access. And if you want to learn more about it, it's the second link in the description. I appreciate your time. Again, if you want to use the same trading application that I'm using, it's free and available to everyone in the US. When you deposit $1, you earn up to 6 free stocks, and I earn 1 free stock. And that is that fifth link in the description down below. If you want to learn more about that PS5 giveaway, it ends this Sunday. And to learn more on how to enter, that's that fourth link in the description. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.